Good afternoon. Welcome to Midcap Radar. I'm Reema Tendulkar. With me is Sonal Boothra, and these are the top stories that we're tracking at 1:30 p.m. Market off the session lows, but trades in the red in line with global peers. IT auto stocks under pressure. Midcaps outperform.
In sector-specific action, cement stocks surge with mid-cap players like Dalmia Bharat and Sanghi Industries gaining 4 to 10%. Birla Corp tells CNBC-TV18 demand is strong. Expect volume growth of 15% in FY23.
Wonderla Holidays continues with its stellar run after a strong Q1. The management tells CNBC-TV18 it is confident of a healthy second quarter and expects recovery in demand.
Max Venture surges as it gets set to acquire Acreage Builders for over 290 crore rupees.
The government clears the Concord land license fee issue, LLF issue. CNBC Awaaz learns from sources. The stock jumps over 8%.
All right, those are all the headlines and stocks which are in focus. By the way, for the markets, there is some massive recovery which is underway. We have seen that Nifty, which closed lower, massively lower, is down just 10 points as we speak. The Midcap Index continues its outperformance. In fact, Nifty is at the day's high. So we have again bucked the trend as far as the global markets are concerned. The Midcap Index again up 135 points. It has been outperforming the benchmark indices for quite some time, and this recovery has really come in from the banking names as well. And IT is the one which is really outperforming today. That index sitting with gains of around 0.6%. So Reema, we did start lower, and how we've been talking that we are not seeing what the global markets are doing, and again these dips are getting bought.
Absolutely. So Asia has ended with cuts of nearly about 1 to 1.5% lower. Currently, the European indices which have open trade are down. The Dow futures too is not suggesting any blockbuster recovery. So this intraday pullback of nearly 1% on the benchmark indices that we're currently staring at is purely domestic driven. And IT, as Sonal pointed out, has made a comeback. If you look at the Nifty IT's underperformance since 19th of August, 19th of August is when the markets peaked out. The Nifty went to a level of 17,992, and from that we've been retreating. So, from that period of nearly 18,000 on the Nifty is down close to about 2.5%. But in the same period, the Nifty IT index was down 9.5%. So after this recent underperformance, you are seeing some buying coming through. But let's invite Samit Chavan of Angel One for a technical check on the markets. Samit, are you surprised by this intraday pullback, and what's the trade?
Good afternoon. See, not surprised at all. In fact, in last couple of days, we witnessed, a gap down opening and then a gradual, recovery throughout the remaining part of the session. So, broadly speaking, markets have been, maintaining their sturdy structure. And if you look at the, overall movement in last couple of weeks, we must admit that we have been bucking the trend, the overall global trend. US markets have been on the declining mode since last couple of weeks, and we have been clearly bucking that trend. Our market has some sort of inherent strength, and the moment we see some sort of positive news flow from the US markets, we would see Nifty surpassing the sturdy wall of 17,700, 17,800, which we have been struggling since last 2 to 3 trading sessions. So there's a resistance, but sooner or later we expect Nifty to surpass 17,700, 800, and then move toward 18,000 or beyond levels. Cannot be rolled out. So overall, the bias remains positive, and now the base from 17,000, 17,200, it has now shifted higher towards 17,400. So the overall bias remains positive, and one should continue to focus on individual stock. Because although markets are consolidating in a range, there are a handful of stocks that are clearly providing good trading opportunity.
So what are those handful of stocks that you're talking about, Samit?
Today's theme has been the cement space. In fact, last couple of days we have seen a strong move in most of the cement counters. So the larger stocks have already moved, like ACC, Ultratech, Ambuja. But some of the mid-sized stocks, which is JK Lakshmi Cement, it's on the verge of a breakout. So we expect some sort of catch-up move from this counter, which is trading somewhere around 492. It has just traversed its important 200-day simple moving average. And now from here on, the kind of price and volume activity that we are witnessing, we expect the stock, heading towards 510, 520 over the next 2 to 3 trading sessions. So it's a good buy at current level, and the stop loss can be placed somewhere around 478. Apart from this, India Mart is the one stock, which has been laggard since last many months. But last Friday, we witnessed a breakout from its inverse head and shoulder pattern. And, last 2 days pullback has clearly got bought into. So the kind of structure that we are seeing on the weekly time frame chart for India Mart, this stock looks, encouraging. And from here on, 5,000 plus levels cannot be ruled out. So 5,000, 5,200. These are the next levels to watch out for as far as India Mart is concerned. And as a trader, one can maintain a stop loss somewhere around 4,658.
Thank you very much, Samit, for joining in. India Mart has had a near 20% recovery. The stock went down to levels of about 4,000 towards the end of August, and now it's climbed up to about 4,800. Big move seen in India Mart over the last 3 weeks. But let's get to our mid-cap mover segment. Nigel is standing by, and he's going to take us through the mid-caps and small caps moving around in trade.
Well, it's looking quite good for the Nifty, right? Big recovery from the lows. But the real party, I think, is still in the broader markets. Just take a look at the big moves you're seeing out there. Igarashi Motors, the counter is closed, up close on 20%. There is pending buy orders out there. Remember, the stock had seen a big surge and then it corrected big time. But it seems now it's doing some bit of a catch-up in line with some of those ancillary stocks. Jindal Photo, well, that stock is running yet again. It's up close to around 14% odd. Bharat Wire Ropes, well, that stock is moving high. It's moving high in rather good volumes, up close to around 12.5% odd. EIH, that stock is well spiking up close to around 11% as we speak. The winners don't end there. Here's Sanghi Industries. Remember on this show itself, yesterday we told you what's going on out there, what are the triggers for the stock. It seems the street is sniffing something, though the management says they have no real comments on that one. It's locked in upper circuit with a gain of close to around 10%. And keep in mind, just in the last 45 days or so, the stock is up from around 30 rupees all the way to around 67 rupees. Specialty restaurants as well continues its upward journey up close to around 10%. And Mukta Arts as well, it's up close to around 7%. However, there are a few stocks in an otherwise buzzing mid-cap space which are under some pressure. Royal Orchid, it's seen a big run from the lows. Now it's coming for some profit taking, someone checking out there. Yet Suntech Realty, remember the real estate stocks have been doing quite well. This one as well has done pretty well. But today it's doing a stark underperformance at the low point of the day as we speak. And Banco Products as well, another one that we don't talk about very often. That stock is down close to around 5.5%. Back to you guys.
Okay, all right, Nigel, thank you so much for that list. A lot of buzzes in the broader markets, but now we'll slip into a short break. On the other side, we'll be joined by Maulik Patel, who is the CMD of Make Money Finechem, to discuss the company's business outlook. Stay tuned. Hi, welcome back. You're still tuned into Midcap Radar on CNBC-TV18. Well, Make Money Finechem is in focus. They reported strong set of Q1 numbers. They also in July inaugurated and commissioned India's largest CPVC resin plant, and a lot is happening in this space as well. To discuss the business outlook, product pipeline and more, we have with us Mr. Maulik Patel, who is the MD of the company. Maulik, good afternoon. Thanks a lot for joining us today. Q1 performance has been really strong. The caustic soda or the chlor-alkali segment in general is seeing a lot of bullishness. Price hikes are in place. But has that continued in Q2 as well? Because we've been seeing commodity prices coming down. What are the current caustic prices? And are you seeing more supply come in the market because of which you could see further correction?
Yeah. So, I think, the Q1 was fantastic. So in the Q2, there are a lot of movements happening in the world. So based on the energy prices, it is moving up in the Europe based on the gas-based chemicals. So because of that, the caustic soda prices remain always high. It is right now it is around 56,000 rupees per ton kind of thing. It is going on right now. But at the same time, because of the recession, in the Europe and US, the chlorine downstream application is also going down, like PVC, everything is coming back to a normal situation. So because of that, also the caustic soda plants, which is not running well in the Europe and US, because of that, internationally, the caustic soda price remain on the higher side right now. So that is the major reason why the caustic soda price, even though the demand is in the lower side little bit on the globally, still it is on the higher side right now.
Okay, and will this price sustain of 56,000 rupees per ton?
So we expect that till the Europe, the situation of the energy in the worldwide will remain similar, though, because this is energy-driven kind of chemicals. So it will remain on the higher side always.
And you spoke about lower global demand because of what's happening in Europe. Is that impacting you?
Indirectly, there are in the caustic soda particularly, if you see, there is an opportunity because we can export from India, because in India we are not dependent only on the PVC kind of molecule for a chlorine downstream, which is a co-product along with the caustic soda. So India is dependent on a lot of other chlorine derivatives, which is on the solvents, which is like chlorinated solvent like CMS, chloromethane, which going into the agro and pharma industries. A lot of water treatment chemicals also, which is manufacturing in India, which is also major demand. A lot of PVC stabilizer, PVC also downstream application, is a major advantage in India. So we are not dependent only on the PVC molecule in India. So yeah, in terms of the caustic soda manufacturing, we are slightly better situation compared to the US and Europe, I would say that.
So, Maulik, just explain this to me, whatever is happening in Europe, what does it mean for the chloralkali segment, say in India? Are you seeing increased inquiries ahead of winter in Europe because there's energy crisis? And you said PVC prices are going down. How much pressure have you seen there? And overall, for FY23 guidance, what does it mean for you?
So we expect in this current financial year, we expect that the caustic soda price till the Ukraine situation will not be normalized. The Ukraine and the Russia war situation, I think it will remain on the similar range. We expect that in the caustic soda, but the chlorine side, the demand of the derivatives, I think the demand of PVC and the other chemicals is coming downward right now globally because of the infrastructure is little on the slower side, in the globally. But at the same time in India, like some of the application like which we are into it, like the CPVC manufacturing, which is considered as a specialty application, which is in the hot water application in India. That application is in the huge demand right now because in India situation of the infrastructure, it is on the higher side compared to the other part of the world. So we expect good demand in coming time for the CPVC in India.
What is exports as a percentage of your sales, and how much can you scale that up to?
So export right now, it is not, we are doing almost 5 to 7% of the entire volume right now. But the epichlorohydrin, the volume which is the product which we have started exporting to US and Europe customers. We are on the approval stage right now, and the major volume will start increasing from the Q3 onwards.
So how much can you scale it up to in that case? 5 to 7% right now with the ECH plant coming. What target can you give there?
So, we are in last year, we have expanded two major applications, which is one is CPVC and ECH. So CPVC is majorly, 95 to 98% we are going to be in the domestic market. ECH, we are expecting, we are doing, I think 20 to 25% we are going to do export in Europe and US customers. So definitely that much volume will increase in the future.
What is your capacity utilization right now, and what's the expectation for the rest of the year?
So currently we have commissioned the CPVC plant, the ECH plant. So we, as I said, we are on the customer approval stage. So it will increase we will reach the optimum capacity, which is 70 to 75% by end of Q4 for both the product. Yeah.
Okay, so ECH and CPVC capacity utilization at 75% by the end of this year.
End of this year, yes,
okay.
That's right.
So, let's talk about your longer term targets. You have a target of 5,000 crores of revenues by FY27. But considering that a major chunk of your revenues coming from commodity prices, which are very volatile, what is making you so confident? Will there be a move towards, say, value-added products? What makes you sure that 5,000 crores in, say, next 4 years is attainable?
So, yes, you are rightly, right now, before 3-4 years, we were only into the chloroalkali segments. And if you see in the last 3 years, we have expanded our capacity into the chloromethane, which is downstream, which is chlorine downstream, hydrogen downstream. We have expanded into hydrogen peroxide. Same way, chlorine and hydrogen and caustic soda, all three of them, it consumes in the epichlorohydrin, we have expanded. So, now onwards, I think, this is the last expansion which we are doing it caustic soda, which is going to commission by end of this quarter. And this is the last expansion on the caustic chlorine side. And all future expansion, what we are targeting is on the derivative side, which will consume chlorine, hydrogen, or hydrogen peroxide, or the chloromethane derivatives, So we are targeting all on the specialty chemical side, which is value-added chemicals, and that will reach us, our target to reach 5,000 crore by adding more chemistry, which is import substitute chemistry, and first time in India kind of chemistry, yeah. Along with the chlorotoluene project, which we have announced and which will commission by Q4 this year.
Thank you very much, Maulik, for joining in. That's the word coming in from Money Fine Camp. Let's move on. We learned that the Cabinet has approved a reduction in Rail Land License Fee, LLF. Parikshit is here with the details. Parikshit?
Well, this had been a long-standing demand. In fact, this proposal of the Railway Ministry had been pending with the Cabinet for several months now. It has finally got the PMO nod. This is what sources tell us. The issue had been taken up by the Union Cabinet today, and a decision has been taken to revise the railway land lease fee policy. So the LLF will be reduced to 1.5% to from 6% that was currently. Also the period of lease has been increased up to 35 years. Now, this was one of the key demands of several investors who were interested in the strategic sale of Concor. And it is believed that this will now bring in more private sector investment and will ease up and speed up the strategic sale of Concor. So we had been seeing the Finance Ministry, the Niti Aayog, pushing for the revision and railway land license fee policy, and now that has finally happened. We expect a formal announcement at 3:30 p.m. this afternoon.
All right, Pariksha, thanks a lot for joining us for those important details. The Container Corp stock is up 11.5% on the back of the source-based news at the day's high. We'll keep tracking the story for you. For now, we'll slip into a short break. But before that, a quick reminder for our viewers. It's that time of the year again. Money Control Pro's Financial Freedom offer is back with added benefits. Get a Money Control Pro subscription at net zero cost by claiming exciting offers worth 1,500 rupees from our partner brands. Grab the benefits now only on the Money Control app or the website.
Welcome back. Today, autos are taking a bit of a back seat. So Bajaj Auto is the top Nifty loser. This is after the CLSA downgrade, where they highlighted that export challenges are there, which is why they brought down the target price in Bajaj Auto by 8%. So Bajaj Auto has slipped about 2.5%, but Tata Motors and M&M is also giving it company with cuts of nearly about 2%. But let's talk about mid-caps. This is our Midcap Spotlight segment. Sonal, what are you looking at?
Well, today, Arvind Smart Spaces caught my eye because, yes, the real estate sector in general is doing well, but this stock is up 6%. Today, it's up 30% in last 1 month itself. And it has been doing well since the time it reported its first quarter numbers. And then on 23rd August, it announced that it has inked an agreement with HDFC Capital Advisors. Now, they already had one, and this is an additional one that they have gotten into. The focus is to create residential development platform with a revenue potential of 5,000 crore rupees. They will be incorporating a wholly owned subsidiary which will be called Arvind Smart Homes Private Limited, and both HDFC and Arvind Smart Spaces will be investing in the subsidiary. So Arvind Smart Spaces will invest 300 crore rupees and HDFC Capital Advisors will invest 600 crore rupees. And over the next 12 months, they expect 6 to 7 projects which will be acquired via this particular platform. Now, this is about the developments that have happened on the platform side. In terms of their bookings update as well, it was strong, 118 crores on a YY basis, and quarter-on-quarter basis, unlike other real estate players, it did see an increase. Collections came in at 133 crore rupees, and unrecognized revenue from existing projects is 1,061 crore rupees. So that is a big number for the company at this size. In terms of projects in pipeline, they have good indicative revenue potential, 400 crore rupees for the Bengaluru project, around 150 for Gandhinagar, 180 for Ahmedabad. So in total, they are looking at a big booking amount going forward as well. So it is important to see whether they'll be able to execute it in the timeline that they have specified as far as these projects are concerned, and also if they're getting collections in time for all these projects. So these two things will determine whether they are on the right track as well. However, the promoter holding, I was just taking a look there, that has been declining for the company. So from 53.82% in March 2022, from 54.34% in December 2021, right now it's 53.82%. So despite company doing well, promoters have sold off some stake. So that is something which could be watched out for closely. But other than that, financial performance, Reema, has been good for the company.
Absolutely. Another stock is GMM Pfaudler. If you remember in the morning, we were talking about their FY25, guidance, 3,700 crore of revenues, EBITDA margins of 17%, ROCE 25%. But the street seems very unimpressed because the stock is now at the low point of the day and it's down close to about 5% at a time when rest of the mid-cap market is flourishing. So GMM Pfaudler is the stock that we were referring to. It's down close to about 5%. There you have it. Let's get you some news now from the insurance sector. Sources tell CNBC-TV18 that the IRDAI mandates dematerialization of new insurance policies. Yash is here on the phone line. Yash?
Well, Rima, so exactly yesterday, we had exclusively reported that the insurance regulator met the insurance industry, both life and general insurance, and the agenda was to essentially look at dematerialization of insurance policies. This is an important proposal, and we've been given to understand today that in the meeting, there are certain mandates which have been given to the insurance industry, both life and general, and deadlines have been set for essentially following those mandates. What is the mandate? The mandate is that by December 2022, which is December of this year, new policies which are sold post that will have to be sold in a dematerialized format, which means they'll have to be brought on a demat platform and then sold. And right after that, that is after December 2022, 1 year after that is what insurance companies will have to essentially convert the existing or the old life and general insurance policies and bring them as well on the demat platform. Of course, this could lead to significant addition of demat accounts. We just spoke yesterday that demat accounts in the country crossed 10 crore for the first time. And this could bring a significant addition because people who already deal in equities have a demat account, but there could be a lot of people who have insurance policies but don't deal in equities. Those will be the fresh addition of demat accounts which will come. These demat accounts will, of course, be with depositories like CDSL, NSDL, Cardvi, and so on and so forth.
Thank you very much, Yash, for highlighting this. Let's wrap up on this show, Midcap Radar. We're out of time completely. Your stocks when we return.